Good morning, everybody. Welcome to the September 6th, 2024 edition of our pre-market prep session. It's Friday, right? Friday on a short week, finally putting this week to rest. Um, Shortened holiday week, right? So we know what to expect out of that. And we want to see what news we have to carry us through the weekend here today. We're here for one reason and one reason only every time we gather in this place, virtual or otherwise, and it is to get 1% better. So make sure you throw those ones in the chat, signifying your intention to get 1% better by the end of this session. Yes, I love it, Alicia. Happy Friday. Hope you're doing well and continue to rest up, recover. Paul, good morning, my brother. Happy Friday. Hope you guys both enjoyed the game last night. Alicia, I know you're rooting for the Chiefs. They pulled it out. They pulled it out. To be clear, I'm not a Chiefs fan or a Ravens fan. I'm just a big football fan. Play a lot of fantasy football. So I'm engrossed in stats. The same, you guys know the type of dedication I bring to the stock market. I bring the same thing to the realm of football. Um, Love studying the stats, trends, all of that, right? That's in place, finding an edge. Um, I talked about possibly throwing some football analysis in the trading group. Maybe a different hashtag or under a different tag or something. But adding that in just for people who are interested. Because I found a pretty beautiful edge when it comes to tight ends and then other pieces of data. Which did me well last night, 2 for 2. Right. So maybe I'll throw them up there. And if you guys are interested in tickets like those, you just comment and let me know. Um, but yeah, by a toe, exactly. So tough. I mean, likely had an amazing game. Lamar, bro. I mean, at this point, there's just no way you're that bad. Like you have to be getting cut a check. There's just no way that you're that bad because that was absolutely abysmal. Stevie could have made those throws, man. It's just ridiculous, ridiculous. But yeah, they pulled it out at the end of the day. You got to execute and you win. And sometimes you don't necessarily win by your own hand. Sometimes you're out by a toe, right? But at the end of the day, the Chiefs executed, the Ravens didn't. So that's how it goes. You gotta execute. And you gotta execute when it matters too. And the same thing happens with markets, right? You gotta execute when it matters. And Lamar did not, right? That choke artist. So at the end of the day, like I said, I think he's getting cut a check because it's like it's crazy to be that bad when it counts. Like absolutely insane. Um, Especially, given the game plan that they had, which made the Chiefs totally beatable at that spot. So anyways, look, that's neither here nor there. Like I said, my bet's cashed. I ain't a fan of either team. Unfortunately, I live life as a Washington fan. So my existence is pretty abysmal when it comes to football, and that's why I like to engross myself in um, fantasy and stuff like that. Because the reality of being a Redskins fan is not fun at all, or Commanders fan, right? Um, even though I hate that name. I hope they change it. In terms of getting back into stock market related things, though, let's get into our newsletter here for this morning. So, our top news, the final print, with the Federal Reserve gaining confidence that inflation is heading toward its 2% goal, the employment side of the central bank's dual mandate has jumped into focus. That puts today's job report in the spotlight and may help FOMC policymakers decide by how much to cut their benchmark rate at the next Fed meeting. The highly watched gathering is only 2 weeks away, and it's one of the last remaining data points before then, along with the CPI reading next week. Stimulate the economy. Traders are leaning toward a 25 basis point cut at the powwow on September 17th through 18th, with a 59% probability that the rate will drop to 5% to 5.25% from the current 5.25 and 5.5%. That puts the odds of a 50 basis point cut at 41% according to the CME's FedWatch tool. Those probabilities have fluctuated largely over the past month as data has continuously been digested, but things are now getting extremely close to showtime, especially after the big revisions seen only 2 weeks ago. Today's consensus estimate for the number of jobs added to the U.S. non-farm payrolls in August is 164K, up from July's initial estimate of 114K, which spooked markets as it was well below the consensus of 180K. However, a couple temporary factors that led to the soft soft numbers are no longer in the equation, like Hurricane Beryl in Texas and the retooling of vehicle factories in Michigan. The unemployment rate is also expected to have inched down to 4.2% last month from a near 3 year high of 4.3%, while wage growth doesn't appear to be as much of a concern as it was a year ago. Now, what to watch, Seeking Alpha analyst Demir Tokic will be looking at three facets of the August report. One, the change in labor force versus the change in unemployed people in the household survey. As long as the number of unemployed people doesn't increase, the recession continues to be delayed. Number two, jobs in the leisure slash hospitality and construction sectors. Both added around 25K jobs in July. As long as those cyclical sectors add jobs, the recession is delayed. Number three, revision to the non-farm payrolls. If the non-farm payroll number is revised lower, that's a negative signal. So some nice insight there into how to break down these numbers, right? And this data and this information that we'll get today. So we're getting closer, right? We're ever encroaching on that time of rate cuts. And I feel like, if we get a 25 basis point cut, then I think we see, if any pop at all, it'll be short lived. I think that we can only have some legs under the pop if it's a 50 basis point cut. Because at this point, everyone knows that we are going to cut. So if they do 50 basis points, then the market gets, some type of push, like real push. I don't just mean like 1%, but if they do, just a normal 25 basis point cut, I think we barely react or we just don't go very much higher. Not that I anticipate us going much higher than here, right? I'm not anticipating radical new highs. Um, but I'm anticipating some more move up before we get the convictional move down. But I'll continue to play whatever the price action gives me, right? My expectations don't matter. I'm just making, hypotheses and this and that. But at the end of the day, I'm going to make moves based off of what the charts say. And that's a big hurdle that people have to get over. You're allowed to have thoughts and, hypotheses and ideas, right? Well, when price action comes in and shows you what it is, you move according to that. And I think that's what a lot of people get confused with when it comes to markets. I can't control markets. No one can. So you could, say, oh, well, I expect this. I don't have money on that, right? But I expect this. It's like, okay, cool, right? If that happens, awesome. If it doesn't, I'm completely fine with it not happening. Why? Because I'm going to move according to how the charts are. People think when you have a preconceived notion that you have to stick to that notion, and that is what destroys you in markets, right? You being able to not move from what you expect is what really destroys a lot of people when it comes to trading and investing as a whole. So I say certain things, but those things are kind of like, oh yeah, this is how I could see it playing out, but that does not mean that, I get crushed if that's not how it goes. We are firmly entrenched in executing based off of what the charts show us, and we'll continue to do that. And whatever, price action comes about, we'll be ready. And if you're not ready, email me, adam@adamhollandeducates.com, subject line trade. Let's get started. M&A news, no Slurpees yet. Seven and I, the Japanese owner of 7-Eleven stores, has rejected a $39 billion takeover by Canadian firm Alimentation Couche-Tard, as it deemed the proposal was too low. Couche-Tard, which operates Circle K convenience stores, offered to acquire Seven and I for $14.86 per share in cash in a transaction that would have made it the largest ever Japanese target of a foreign buyout. Seven and I said the offer grossly undervalues its standalone path and does not adequately acknowledge the challenges the deal would face from U.S. competition regulators. Yeah, I just learned a whole lot of information about stores that I did not know. Like I didn't know that 7-Eleven was owned by a Japanese company, and I didn't know that they were called Seven and I. I wonder why they're called Seven and I, lowercase I, and not just 7-Eleven. I also didn't know that Circle K was owned by a Canadian company. So the more you know, right? None of this really is impactful for us at all, but just fun little tidbits of information. Consumer news, panic buttons, looking to step up worker safety. New York Governor Kathy Hochul has signed a new law that requires retailers with over 500 employees to add panic buttons in all locations in the state by 2027. Quote, the real-time solutions in this law will save lives and make shopping safer for all, said the Retail, Wholesale, and Department Store Union. However, the industry isn't convinced about panic button effectiveness, with Walmart opposing it over false alarm concerns. The NYPD Community Affairs Bureau previously said 911 calls would be more useful to communicate with law enforcement. Yeah, I mean, I guess it's good to have a panic button. Like, just have one in the store. It makes sense. Um, don't exactly know why this is news. Must be a slow news day. Like, I don't see why that is impactful at all. In media news, In Control, the keys to Paramount Global ultimately fall into the hands of Larry Ellison, the billionaire co-founder of Oracle, ticker ORCL. It'll be made possible through a series of trusts and companies after a group led by his son, David's firm, Skydance Media, took over the Redstone empire. Meanwhile, Sherry Redstone, current chair and majority shareholder of Paramount, will rake in $180 million in severance and other benefits, in addition to about $350 million from the sale of her 20% stake in the Skydance deal. So yeah, more unsolicited Paramount news this morning. I hope it's just done. They can put it in the dirt already. Today's markets looking mostly red across the board, except for a bright spot in gold. In Asia, Japan down 0.7%, Hong Kong down 0.1, China down 0.8, India down 1.2. The FTSE in London down 0.3, Paris down 0.2, Frankfurt down 0.5. The Dow down 0.3, S&P down 0.6, Nasdaq down 1.1. Crude flat, gold up 0.2%, Bitcoin down 1.1%. Today's economic calendar, we got a few people, members of the Fed speaking. Waller speaks during market hours, but he's not really one that moves the needle. Our rapid fire stock news rundown here will take us out. Broadcom, ticker AVGO, AVGO slides as forecast falls short of expectations. OPEC Plus to delay October oil output increase for 2 months. Cleveland Cliffs working on bid for U.S. Steel, their assets, right? Steel is U.S. Steel is X, which we've been talking a lot about. DocuSign results crush estimates, but shares slip. So both Docu and Avgo looks like they slid after earnings. Docs asks top four U.S. airlines for details on rewards program. Salesforce ticker CRM to buy data protection startup Own for $1.9 billion. Yeah, it makes sense. I feel like especially in the in the wake of the rise of AI, Chinese automakers add market share as foreign rivals struggle. Toyota, ticker TM, may be the next to slash aggressive EV targets. Qualcomm, ticker QCOM, exploring mixed reality smart glasses. Have we not had enough of this already? Smith& Wesson, ticker SWBI, swings to loss on sluggish summer sales. Yeah, definitely slow news day here this morning, but that happens. Some days you get mornings chock full of news, and then other days you get, updates on 7-Eleven's parent company. That's how it goes. But listen, we'll see what markets have for us today. We'll see if there's anything saucy, anything sexy, anything worth taking a look at. Also, all of that has changed. It looks like we'll open flat slash slightly green. So things, recovering here from when this newsletter came out. And we'll be ready, right? We'll be ready for whatever the market ends up having for us. And I'm excited to do so. As always, right? Continue to fight the good fight versus yourself. It's you versus you. Don't look to the left. Don't look to the right. There's nothing there for you. Your path is ahead, right? And it's always a game of getting 1% better daily. So focus on that. Focus on you. Take some time this weekend to sharpen your edge when it comes to markets, as well as learn more when it comes to education and application with artificial intelligence, right? You do those two things, you will be able to consistently multiply every dollar that you bring in. You'll be able to bring more dollars in because you can do more things and provide more value to the marketplace around you, right? So let's crush it. Have a great Friday. Everybody have a great and safe weekend. I'll see you back here on Monday, back to the full week schedule, baby. I love it, for our next pre-market prep session. Have a good one, everybody.